Hey, good morning, everybody. Happy Friday. Hello, Jack, Fred, Julie, good morning. JW, Tyler, JB, how are you guys doing? Sky, hello. How's everybody? If you're holding some short trades, you're making a little money today, it looks like. Welcome to Friday, TGIF, right? October 18th, 2023. I'm more than likely, like a serious 100%. I'll be closing my QID today. Take the profits on that. And yeah, have a good weekend, I guess. That's what, bottom line, that's what's going to happen with me here. So the SPY, this line right here, this is the 50% retracement from this low right here to the top. The reason I picked that low is because, I don't know if I've already said this, maybe I have, is we have this top right through here, kind of right in there. And then this is where we broke out. Well, here's where we popped, and then we tested, and then there's what I'm counting. So this is a new leg right here. This is consolidation. That's a new leg. And where we're at now is have given back about 50% of that new leg. 50% is a common place for price to go to. In any of these areas, I guess is common. If we can't hold here, then I suspect the next move down is back down here to this 421 and some change. And that puts us right in that breakout area. In the grouping of candles, the price action that broke us out. So breakout, test, and right there, we started to move up. And that's about that 421 and some change right in here. Currently, if something like this was to happen, and whether it's, it could be today. I can't predict that. But if some kind of bullishness was to happen today or Monday, be careful not to chase that first move. That's the dangerous move to chase. You want that move to establish, prove itself. We want to test, and then we want proof that we're going to move back up. So probably should have done this a different color. So let that first move run, let it test, and then watch for those bulls to start coming in. And then over wherever that high might be a trade to the 50-period moving average might be a good idea. Okay, outside of that, this market is still bearish. Everything should be looked at as bearish right now. We are horribly oversold. Hey, how do you like my new color there? I was playing with that last night. I thought, hey, that orange looks good. Too much red, so I had to change the color. Right now, we're T21, 22, 23 is seriously bearish. Way, way down there. Let me put it up here. And I don't often care too much about the daily, but I think maybe now, we should take a peek at it and just look at the magnitude of this and what could be happening, rather than just a short time frame like the 15-minute and 60-minute. And if we go back and look how this has acted, this has been some pretty good, let's go here, bearishness here. So, that's a few days down. That's a couple weeks to the downside. If you look at this, that's a couple weeks. Excuse me. Good morning. A couple weeks to the downside. Look over here. Couple weeks, 3 weeks, maybe 3 weeks to the downside. So we are very young in this pullback right now. Very, very, very young. And we could easily pull back. Check out the weekly. Yeah, weekly is still bullish. The thing, the thing about the weekly chart is we have to be careful. Some traders, they get to looking at the weekly and they think, hey, okay, This is bullish. So that they get to trading, and what they don't realize is that daily charts that are moving down, and if you're looking at the weekly, it just absolutely eats your lunch, is what it will do. It just kill you. But you're right. The weekly looks good here. The weekly still looks very, very bullish, right here. But I mean, who trades, honestly, who trades just the weekly here? And I doubt anybody does. So I think we have to be very in tune to what we actually trade. So now, you know, I hear a lot of rumors, a lot of things. You know, people share a lot of stuff with me, and you know, there's still that, you know, there's still talk, and there's still concerns of, you know, total disaster, market moving down. Probably should move here on the SPY, and you know, we've joked a lot about this 350 area back here, and is the low end for 2023, and I think it is. That doesn't mean that going forward past that, we can't get below that number. Now, we've got a lot to get through here before that happens. We've got an awful lot. So I'm not sure I would get all panicky, because I did yesterday afternoon, well, after market close, did a coaching class, and that's one of the things that someone was concerned with, that we're going to crash. Well, you can't, you know, you can't wake up every day and go trading, oh my God, we're going to crash. That's the death of a trader. Man, I'm sorry. Man, I've got a fur ball in my throat. Can't get rid of it. Okay. So, I mean, we trade the trend in front of us, and having the trendicator here, this, the red, the green, this is I think the coolest thing just to follow. And as Richter pointed out, the weekly, you know, the weekly gets bearish there, then okay, we might have to, you know, talk about that a little bit, a little concern. But if you look at it here, you know, if you take this low, there's still plenty room for this to move down. Good support area, let's see here, right, you know, is through this area right there. So we could give back 3/4 of this move. That would be about 3/4 of this move, and then yet come back up. So anyway, I you know, don't turn into a negative Ned right now, but don't, you know, I don't think the market is long at this point, so totally short. Qs. Let's take a quick peek at the Qs. The Qs are coming down. We're almost at that 50% level. I would be surprised if we don't make that today. Diamonds, we're below the 50-period moving average. I didn't put those up on the 50 there. And I can't remember if I did it. IWM. IWM's all the way down here to the 200-period moving average. Is that good? Is that bad? We don't know until either price continues or price changes. Okay. Yeah, Richter, yeah, there's been some serious BAS taken on, you know, positions you're holding or longer term holds, yeah, right now, because of this market pullback, for sure. Anyone have any shorts that you're looking at? I'm not sure that I've even, I created a new bearish H pattern scan. I'm going to keep an eye on that. You know, that's, anyway, on the bearish H pattern, here's what I'm looking for. First of all, let's make that stay on top. And it won't show anything until the market kicks off because it's brand new. Take the SPY here. So here's what I'm kind of expecting. At some point, you know there's going to be some kind of bounce. I mean, absolutely, okay? I mean, it may be down here, but at some point there's going to be a bounce. So when we have a bounce, we start to see that rollover. There's a bearish H pattern. This is the perfect time to start looking for these, setting up for the next rally little rally, you know, that hopeful bullish move, and then when we start to roll, we can look for those bearish H patterns to continue that trend. And this is what you're going to have. I mean, that's very typical right there, right? Just down, up, down, right in there. So that's what we need to start planning for. Let's see, Jack, RCL. That's short. You know, there's just some things that are just, I think, are so sinfully obvious, like this right here. And if you're wrong, that's what you have stops for. Certain rules we play by. I mean, if we look at this top, it totally failed. And then we take a look at this rally, we've got a lower top. Totally failed. So what that's going to do is give us this downtrend line. We've gone from green to red. We could even make an argument. I'm going to do it this way because it's faster. We could make an argument here, shoulder, head, shoulder. So now you've got a bearish head and shoulders here. So totally topping action here. Absolutely. Now we're below the 50-period moving average. The T-line is below the trend indicator. Boy, how many check boxes do we need for something bearish? Good grief. There's a whole lot in here. So nice chart. Thank you very much. Entry-wise. So it looks like we're going to open up below yesterday's candle. I would certainly prefer to have bought that maybe in an inside day. But, you know, sometimes you don't always get what you want, especially in this case when the overall market is down, even before you get a chance to get into it. So what I typically do is try to, you know, I either physically put that buy box in there or mentally I can see this buy box. It's all about this candle now, the previous candle. So I want to buy within some area of that candle. Now, there you go. Is that the area of that candle? Well, it is, but it's a stretch. You don't want to buy down here. So, I mean, can we buy like right away in the morning? Sure. And you've got your stop, but you might be risking about 5%. Now, if that's cool with you, that's fine. And there's nothing wrong with that. I don't think 5% is necessarily that bad. So beautiful, beautiful chart setup here. Thank you. Shop. Here's Shop. Shop's got a date with the 200-period moving average. So for me, my whole trade plan is about moving averages. Then I go look at, you know, price action resistance, things like that. So my whole trade can only be about 6%. I don't necessarily see the Shop as the trade for me personally. You know, we're starting to get down now. So that's number one. I'm going to look at the moving average. Number two, I'm going to come over here and look at price action for any kind of support. And here we are popping right into some of that. Probably the strongest maybe right about here. So now this could be a 12% trade right there. And then it's just reevaluation is what it is. So Shopify, is that, yeah, Shopify, it still definitely looks down. You just have to watch those areas where the bulls might step in, and the 200-period moving average is one of those areas. Okay. All right. What else do we have? Anything? Take a look at NVIDIA. Look at NVIDIA. The bullish engulf did not get going here. Now, really, it's below that bullish engulf where the shorts are going to really start picking up some steam here. And you can see this low right here and move over, and you can see the possible support in that area, possible area where buyers might step in. So what are we going to do? Well, what would be wrong with getting into a short if you want to trade? If you don't want to trade, don't trade. You know, do something like that. You're looking at maybe a 5% risk. Just try to, you know, inside that area. about halfway of this bullish candle might be another way to take a look at that. Let me move that up just a little. Oh yeah, right about there. So inside this area and stop-wise, that would turn the trend indicator green. So that's about a 5% stop if you're not right here. So anyway, nice chart for a short right now. You just have to really get that follow through. But even coming down to test down here is going to be 5, 6, 7% in profit. So check your NVDS long. I love that chart. I love these long ETFs on some of these charts. This I think is a great idea. It's priced where retail traders can get it. I think I mentioned this yesterday at the webinar, members webinar, that, or maybe it was something else. The majority of traders learn long trades far before they learn short trade setups. And most, not all, so I'm not saying that to everybody, but most traders would prefer to trade to that long side. Okay, well, it's Friday. Let's see what this market has to give us here. And you guys take care. We'll see you at the bottom of the hour when the market opens up, okay? Have a great Friday if I don't hear from you.